All right, good afternoon, everyone. Happy Monday. It's 1 o'clock, March 9th, 2026. Trading Trends with John Salama, CMT. Let's get right into it. There's a lot of things going on as usual. Crazy, frustrating market. This is pretty much going to be the commodities show, it seems. But let's get into it. We were talking about on Friday, as I pull up this screen share up, that the market was showing, some crash tendencies here. It was really on the brink. I don't know what you do when data changes. You got to adjust what you're doing, what the market is giving you, right? What cards are being dealt to you at the dealer table, right? So Friday we said the market has some tendencies for crash-like behavior, and that's what we were seeing pre-market. Some of the futures opened up. You saw what was happening in Asia, and then rebound, usual playbook that happened from last week. Lows in the morning, 6, 7, 8 a.m., and they crank it throughout the day, and now vol is actually off pretty handily. So we'll take a look of what has changed, but it's super defensive. I would advise, if you're kind of new at this, really have a bunch of cash. You're going to have dry powder. I'd be careful bottom fishing on that tech weakness. I'm just still not a fan, and it seems late cycle to me. So let's take a look. Oil, massive pop, although it sold off a little bit from the peak. China, a big pop. We were considering on the turtle system shorting some of China, KWeb, but they both popped up today for what it's worth, and now a little bit of risk appetite. They're getting back into the high yield. This has been more and more an area of focus here on the program, and it's just up 30 bips today, but it is definitely a great barometer to check on the credit crisis, if there is one, as well as, overall risk appetite conditions. And then retail, really the ugly downside moves here are retail, home construction, and insurance. These are kind of in free fall. Soft landing thing is kind of, up in the air. The Fed's kind of stuck because if an oil stays up here, we don't get a ceasefire. That's inflationary. They can't cut rates because, again, inflationary. So if the jobs get worse, they can't really do much. So, and they're usually late to the party anyway. So the market trying to digest what the Fed can do here, because they absolutely are in a rock and a hard place. Maybe they'll cut in June, maybe they won't. But let's look at everything that matters right here, okay? So let's get to the dashboard panel. There's a lot of important tickers moving around here. Let me make sure you see the screen. Boopity, boopity, bop. All right. Hopefully everyone out there, this is definitely, I'm glad I have a system that I follow religiously, because if you're just trading discretionary, I think you're going to get screwed and taken out back in markets like this. But we'll take a look. Right now, SPY is down 30 bips. Q's crossed the Rubicon. It's flat now. So folks are gauging on, like I said, a little bit of a risk appetite. They're getting to high yield. They're getting to some tech. NVIDIA up 1.1%. Tesla going the other way, being dragged down with consumer discretionary. We'll take a look at that in the retail basket. Micron up 2.5%. Nice to see. Broadcom up 4.5% when they're going through some of these tech advances here. Palantir down nearly 2%. Taiwan Semi up 1%. Like I said, supporting the party for the semis. Google up 1%. What else here? Meta down 1.5%. AMD up 2%. Like I said, they're loving the stocks, and the leveraged ETF for stocks is up 4%. So here intraday tape candle reading here, same thing. The low is actually at 4 a.m. We got very close to it at 9:30, but look what happened. A little bit of weakness through 10 a.m. And honestly, right at 10:30 a.m., they got their legs underneath them. I gauge that by crossing above the 50 RSI plus holding a inclined VWAP. That to me right there said, okay, we're probably going to go higher. But that was at 10:30 a.m. So you had an hour of weakness. Some call it the Jane Street Slam, whatever. But 10:30, we finally rebounded. It took SPY from 664 to 668. And now here we are, pretty much very close to high of day at 670.5, on the door of 671, with short-term resistance right here, pretty heavy at 679. As I zoom out here, so, I mean, like I said on Friday, it may seem like I was bipolar, but that's kind of the jive that the market was giving me. I wanted to end the call or the video on Friday saying the market very likely in 1 week's time will either be at the 200-day moving average or all-time highs. And I know that sounds bipolar because that's just the way it is, and that's the way the market is. And we'll see how the rest of the trading days, through the end of the week go. Oh, also programming note, I will probably do a video on Wednesday, and then I can't do one on Friday. So another video, maybe 2 this week. Just so I get my 3 out there, because I think the market's going to have a lot to do here in the next several days. So right here, as I said, I was looking for all-time highs this week. I'm going to check my notes here. Not that it matters anymore, but you always have to change, thesis sometimes when the market gives you different cards. Yeah, so I was looking for all-time highs here right around like this Wednesday. We were looking, like I said, there's levels of this. You had to hold 670, 680, 683 right around there, and then 688, honestly. And then once I saw that match of the all-time highs prior, 698, I thought we were gonna get a little bit of FOMO flush. The only way you get that now is oil has to go south. You need a ceasefire. The trading now kind of stinks because it's just straight up war, or contrarian plays on, say, tech weakness and such. But right here, let's go to levels of what is important and what's really not. So they have not held, this is important to me, SPY over 50 RSI since February 26th. So I don't love that. 11 days in the doghouse. Is this going to be an actual, full-blown bear market, recession, or just a correction, as we still have a nice rise to 200-day moving average? But look, the buck stops right here now. The SPY 200-day moving average is going up, what is that, 40 cents a day? If you definitely see this close under 657 just one day or revisit it, you're going to start seeing this sideways and going lower, and then people are surely going to say there's a better shopping mall to shop in and to buy stuff across the world. Germany, Europe, Africa, more of that small cap, just a less away from tech hyperscalers, high spending. So there's going to be better views here to cooperate and to buy, and that's kind of what you're seeing here. It's kind of a frustrating. I was texting a trader the other day. I said market is less than 3% away from all-time highs. VIX is at 3-month highs. Something has to give. And really what I'm saying, I was verbalizing this huge rectangle box that we've been stuck in between 700 and 650, decent range, 50 points, a little bit less than 10%. It has to break one way or the other. Decent looking candle here. Do note that the low today was around 662. You got 1% away from the 200-day moving average. What I see here, and this is going to be a frustrating little program, I don't love SPY here, but again, I want this to correct. It's going to be complicated. For what the price action for me looks here, when you have that break here on a 3-month lows in SPY, I don't love that kind of weakness, obviously, and a 37 RSI. They're shopping elsewhere. The trades right now, it's just energy, it's vol. We'll take a look at the important tickers here. But I think the floor for this still will be right around that 657. Truly, I have a 657 to 662 floor for SPY here. I do think we probably get close to it over the next 1 to 2 weeks. Be careful. I really don't see, I know people slam on Jim Cramer all the time, but he said he doesn't really see a path for de-escalation. Everyone says, we're going to do all-time highs tomorrow. Don't slam on my boy Jim Cramer. He's my Philly Eagles guy. But I want to sit this one out. I would give this about another, honestly, in terms of SPY, buying Mag 7, that kind of straight up digital beta that has really held us up all the way through January or so. To be exact, the highs were right here. Seems like ancient history, but January 27th was a SPY all-time high. I would stay out of this for like another week or so. I think the price action to me looks like it wants to get very close again to the 200-day moving average. Like I always said, Friday afternoon, that close was really important to see where we were going to go between 3 and 4 o'clock. That was the candle right here from Friday, and you see today. But there's a lot of trading left. So let's get into what is actually moving this. So like I said, for SPY, I would stay out. I think this wants to visit again that right around that 656. I think it's probably going to touch 200-day moving average. JPM Trading Desk had a tactical note saying I think they believe SPY is going to trade down to about, I think, 630 in the next several weeks. Citadel says we are going to go the opposite direction through, I believe, March and April. I think I saw another thing from Citi say we're trading down. So as I said, if the market seems bipolar, you got every sell-side bank and some buy-side firms telling you every which way. Act accordingly. It is definitely a mixed market. That's what happens when you have the high about 6 weeks ago and you're trending lower since then, going towards a almost flattening 200-day moving average, and you can't hold a 50 RSI for the past 2 weeks. That's weakness. So let's get into it. That's what my base case is, though. I think we test, like I said, close to that level. But SPY is not going to be the game in town. Let's see what is going up higher here today. Let me get the thing. Oh boy, why did that move out like that? Okay, you should be still seeing SPY. All right. Oh boy, give me a second here. Some screens moved as usual. All right. Bang, bang. Nope. Oh boy. All right, apologies. Where the heck? All right. So what do you think? If you have a ticker or something, put it in there. My screen just froze here, so apologies. Oh, there it is. All right. All right, number one here. good Lord. All right. Number one, enough. USO. Let's get right to the bell of the ball here. USO, interesting. I'm going to go on a 1 year chart for all these. So this is up 5% here. You should be seeing this live now. Yes. USO, a new 52-week high right here. Do understand we've been outside the upper Bollinger Band, not right since the war broke, but since March 2nd. So 1 week now straight of being above the upper Bollinger Band. We are at 91 RSI, all green bars, volume a little bit lower versus what it has been, since the breakout. But again, this peak today, this is important. The peak today was 125.67. VWAP is 117.38. We sold underneath both of those now. We're at 114 handle right now. Be careful. See how this goes at the end of the day. Folks are saying, we're not going to get to $200 oil and so on and so forth. The RSI tells me another thing. They're absolutely buying first and asking questions later. It's, of course, in nosebleed territory. The Turtle portfolio bought the PDBC. That's the commodities basket on Friday. I thought it was an absolute necessity on 52-week highs. Don't forget that is soybeans. Let me move that box out of the way. That is soybeans, corn, wheat. It gets more exposure than just, silver, oil, etc. So PDBC, take a look at it. I am in it, and I actually doubled down this morning. This is crazy. My full target back to USO here, honestly, is like this is so overbought. Like 105 tops. So this is giving me agita or kind of vibes. I'll be out, through the south. But this is giving me vibes of North Korea like 2 weeks ago, and people thought I was psychotic when I said this is maybe very well going to have a drop to the 21-day exponential moving average. This is going to need not just a deleveraging, though. They're going to have a headline risk. That's what is annoying about these kind of markets. It's headline risk. Pretty much that's it. Something goes up in Lebanon, Iran, you name it. That's all this is going to trade on. That being said, though, if you want to buy the ATRs on the bottom of your screen, that yellow box, I don't know if you can see it because my beautiful face is on it, but right here towards the bottom, it's 550. So if you wanted to chase it right here, I'd be careful. I'd want it to hold VWAP today. That's not a great sign. If it's not holding VWAP on the day, it could be a signal that tomorrow's lower. Just saying, it was up massively, and now it's up just 5%. But if you want to chase it right here, right now, 2 ATR is $11. Go for it. You can, rock your socks off. But if it drops to 103 GTFO, get the out, because it's very likely going to $85. Save yourself that difference. But for right here, oil, by the way, tell me last thing on this. Tell me the smart money didn't sniff this out, or you could just say it's an XLE, sympathy bid correlation boom. Oil has held a 50 RSI since January 8th. So this has been a 2026 thing all year. And then, of course, like I always say, break out above a former region, former area, plus overbought. That signal was January 29th. Boom, that's $80 here. I don't think that's going to give way. So like I said, I do see warning signs of when this ends up breaking. This should go back to $85. And I still think it's a decent spot in your position, in your portfolio. But like I said, if you want to chase this right here, that's the way you do it. $11 is a lot for an ATR. You could do 1.5. And that'll get you somewhere in, like I said, about $8 or something like that, $9 if you get in right here, and it drops down to about 106, something like that, get out. So that is oil. They have been all over that bad boy today, obviously. Let's get into some of the others. FXI. So we have been back and forth on this. China, a big bid today. That's pretty significant. It was up 1.5% when I wrote this. Now just off a touch, up 1.2%. But look at this. Confusing picture, right? Peaked back here in October, and we have been under the 200-day moving average pretty demonstrably since February 24th. Don't like that. And a nice floor here at 35. Finally not oversold anymore. FXI has not been the place to be. K-Web in this almost always shows up in the Turtle system short. I picked the regional banks. I shorted Jets and regional banks. We'll get to the Jets in a minute as a direct victim of oil, of course, because they're paying an arm and a leg as it's $110, $115 a barrel. China is looking somewhat constructive here. I do like to see that bottoming action here at 35.30. It looks like it finally did. I love the long shadow here on the wick. And then also on Friday, I think, what day was this? Boopity bop. Thursday. I like the floor that it put in here right around 35.25. And now you're seeing a decent handle here. Still ways off from 50 RSI. I think as folks try to escape or maybe go the other way from some S&P direct American beta exposure, I do think somewhat they will flock a little bit here to China. I actually see somewhat of a decent. Shocking to say, because this thing, if you can tell here, was basically at, we're basically going at, my gosh, 9-month lows here for China. So I typically don't get too bullish for that. But I do think this reaches about 37.5 over the next 2 weeks or so. It's done some good work today, up 1.25% or so. I think this has, like I said, another $1.20 to go. So that's pretty monster move, honestly. That's like 3-4% off the top of my head, back of the napkin math. So the check and money flow also in China has been really decent since Thanksgiving. I'm talking about those bars. There has been, decent orders from 3 to 4 o'clock. They're not absolutely just selling and saying, get me out. However, though, versus SPY, which has been holding its own, it's been tanking, and hence why this picture is mixed in this chart. Tactically, short term, I think you do get a 37 handle on this. I do not think it recovers, though, to this 200-day moving average at 38.70. That, to me, looks like significant resistance. All right, trades, I mean, I don't mind. I don't think you're going to get paid a ton for them, but you can probably sell these $35 puts. Go out 3 weeks. You might get paid for that. KWeb probably more. See basically the same equivalent level, right? See that either basically where we bottomed out last week twice for the KWeb. I don't know if it's one of the charts we're looking up next, but otherwise, I mean, I can also sell the 38 calls, but I don't think that makes sense. So not a ton of option trades here. I like when things really stand out for options trades. It seems obvious. Is typically like the way I kind of like to do it here. Otherwise, I'll just be levered with ETFs 1x. It's honestly been a much, much better way to do it. We have given back some gains, but still up double-digit percent on the year. Don't try to be right and predict this market. Trade the market in front of you. It's pretty difficult. But you got to have a system. Don't want to be right. Follow the system. So they're buying USO. They're buying China. And the other thing we talked about, high yield. This was important. Understand the scaling on this, okay? 75 is the bottom of the screen here. The top is 81. This is high yield, a fixed income ETF. They are loving it today, up 25 bips is the high yield. Good to see. That's risk appetite. That's going to be correlated with S&P going higher. I also think for this, similar to, in terms of China, I think the floor here, again, HYG got back to around 9-month lows last week. Don't forget, this group peaked at the end of September. So I like the floor here right around 79.5. I actually didn't even think it should have gotten that low. I had a floor of 80. So things really did kind of break a little bit towards Friday. That's what was giving me crash vibes, and that's what we were seeing last night. Russell was down 4% last night in the futures. VIX, oil, obviously popping. So here, let this base around 80. I do see a move here in high yield over the next 2 to 3 weeks. Not going to be a straight line, not going to be just, linear. But I do like this here. The 200 moving average, and the chart here looks better than the S&P, or not versus the S&P. I mean, we're under the 200 moving average for, almost 2 weeks. So I won't say that, but you still have a nice incline 200 moving average. Again, fixed income ETF. I do think and believe the price action tells me this is going to move to about 80.5, that 200 moving average, and then it's going to bounce lower. That tells me a lot that if the high yield, category in the United States is reaching its resistance, and then they're likely going to let it go. I don't love that, what it means for risk appetites here in terms of ARK and things like that, a little bit more growthy spec type stuff. You'll see what I mean in the other movers of the day. But again, an HYG not having a similar, like I said, with SPY, a 50 RSI since late Feb. So not giving me warm fuzzies, although a nice day for high yield today. Good to see. All right, let's look at the losers. This is important. A lot of mixed pictures, as I said. Retail, the number one loser today. Down an ugly 2.5% now. When I wrote it, it was 2.25. This is what I'm saying. Look at what we're seeing here several times. You're seeing several things trade under the 200-day moving average. That's not so great. That's like you get up to bat and you whiff. You're like, oh, that's embarrassing. You go to Topgolf or something. You're like, oh, the ball's right there. I'm dumb. Like that kind of thing. But look, you're oversold in retail. This is a 70% consumer economy. Don't want to see retail oversold and hitting 200 and below the 200-day moving average, where this is starting the flat line here. So it doesn't give me warm fuzzies. You want to see retail do well, and the retail group honestly peaked at the end of January. I remember, I think Sydney Sweeney was single-handedly holding up this group, half joking, because she did the whole thing with, I think it was American Eagle or Abercrombie and Fitch or whatever. And this thing, did wonderfully. Maybe she should do a commercial for Q's. It's actually not a bad idea. Right here, nasty looking chart. My floor for this was $82. I thought, and we don't get paid to think here at all. The 200 moving average is 83.67. This thing, similar correlation with SPY, not holding a 50 RSI since late Feb. It's not what you like to see. And again, this is the slinky, holding in $87, holding it in, and it's gone, similar to South Park. And then it goes boom, from false moves come fast moves very quickly. Decent-ish candle looking today, holding that 80 handle. But be careful, look out, still down 2.5%. This is the biggest victim today, believe it or not, is retail in terms of multiple sigma move. Okay, so surprise standard deviation moves. Now, 2.5% is no joke for retail. Look for it to base. I think it'll hold this 80. I thought it was going to hold 82 even. I think this pops. You need like some kind of ceasefire. You need some kind of headline risk. I'm looking at this chart, and I do see a mean reversion to 86 over the next 2 to 3 weeks. That's a massive move from 81 to 86. That's like a no touch for me. I'm not personally going to trade or put my net worth on it because it's nosediving and it's oversold for the first time since Liberation Day last April, 11 months ago. So again, no warm fuzzies for Salama on this one, but I do like the support there 80. This little bit is giving me a little bit cause for concern. These Thanksgiving week lows down to 77. I'm not so sure if they want to flush it one more time. Look at the afternoon trading. Today's low is 80 even, as well as view up on the day is 80, 83. So just barely holding that on at the moment. So no trade for me on that one. I don't know. I don't really want to sell puts. I don't want to buy calls. You take high probability setups here. Okay. I'm literally the Department of Defense type portfolio. I'm long Shield, short Jets, short regional banks, and I'm long PDBC commodities. So this isn't like, I think CoreWeave's cheap or something. It's not that kind of a market. Okay. But that is retail. I'm giving you levels here. If you have exposure, use those as important guardrails. Okay, so they're hammering retail. Here's another thing in terms of stagflation. You're not going to be spending money at J. Crew if your job is potentially in flux and oil's over $100 going to cost you money to get to the mall, right? Another thing is in free fall with the stagflation. Home builders, home construction, ugly day here. We were talking about this before. This is down 3%. Again, major subsector holdings in the U.S. economy under the 200 moving average. Things are breaking a little bit. That's what gives me warm, I should have called the video no warm fuzzies. But that's what I'm saying here. Again, I didn't think this was going to break this low. My floor for this was 101, okay? And yet it wanted to go lower than the early year lows. And again, that Thanksgiving week low is just a little bit ominous to me. This low here at $92, I'm not sure if it wants to visit and plunge one more time. This also is under view up on the day. This 95.70, I want to see how these names go into the close. The theme has been low in the morning and around 9:30 a.m. and then throughout the day we go higher. You're kind of like a nincompoop. If you're short in the morning, it's been a buyer's market in the morning because it goes higher by 3:30 p.m. or so, and then we basically continue the game all over again. But this is oversold. Similar environment of when it slipped here the week before Thanksgiving. This is definitely going to be a tougher road here, but I do think this mean reverts to about the 104 to 106 region. It's going to have to be a tough move because it has to leapfrog above this 200 moving average. I do think it does it, but be careful. You need to slide in rates, maybe some Fed commentary. It's a difficult market out there. Home construction, the number 2 loser after retail. Be aware of that. I do think, like I said, this does mean revert though towards the 102 to 106 area. The equivalent of what's going on here with why the forecasting seems crazy is when the market is doing what it's doing, VIX is at 3-month multiple highs. It's basically you're driving and it's raining cats, dogs, hail, and you can't see. There's absolutely no visibility. So your forecasting has very little visibility, hence the 102 to 106 forecasts, whereas before I would possibly say 102.45. So that's what's going on here. So home construction, no bueno today. It's a tough environment too to sell puts in any of these things. So I'm not sure if the November puts or the November levels get taken out. So this week's going to be very, very telling and importante. Excuse me. And then the next one, insurance, they're selling off here. Multiple sigma mover here, insurance to the downside, down 2.25% when I wrote it. Now slipping further, down 2.6. This group's been crap since right here, that big plunge on February 9th. So exactly 1 month for insurance. And folks used to love this group for the recurring revenues, right? Of course. And this group peaked last March at $61. And now here we are, $55. Everything, it seems, is within a rock's throw away of those October, November lows. This one looks like it has very strong support here at 55 even. I would be remiss to say, it's not worth a pickup here. The 200-day moving average looks immensely heavy at around 58.5. But, geez. Tough one here. I think the measure and move here, I think this actually accomplished its target. Unfortunately, if you're long insurance, I think this did the move from 56 to about that 58.5, and I think that's it. I would look out for the next 2 weeks for insurance. I don't love this group. It looks like it wants to go towards 55 even and hold there for 2 weeks or so. So I think this one's going to be south for about 2 weeks. I kind of like the idea of selling the 58 calls, but again, it's insurance. Ironically, you're not going to get paid selling on that. I don't really want to sell like the 54 puts. You don't get paid in KIE anyway. Maybe you're better off going to like a Marsh or Travelers, Chubb, etc., and get more single stock risk to get paid from the risk premium. But that is insurance right here. These are the biggest losers on the street today. They've been absolutely selling, hammering down today. Retail, home construction, and insurance. Understand that. All right, top 3 gainers the past 5 days. If we highlight already, I'm not going to really kick a dead horse on it. Shocker. Take a guess. My kid can spell this one. Number 1 winner of the past 5 days, U to the S to the O, up 32%, nearly a third in freaking value in the last 5 days, average of 6% or so a day. Honestly, that's why I feel good with my PDBC long. This is still massively up. I know it's up just 4.5%. It was up much, much more. CO closes today. This typically does not stay. You can't have 2 weeks of upper Bollinger Band closes. That's really hard to do. Really hard to do. That's like Taylor Swift type stuff. I mean, this is, in terms of supply and demand. That's what I meant by that example. Yeah, this has been massively green since February 26th. So this has been 11 days just up, and away. So that's all I'll say on that. Let's go to volatility. This is the number 2 winner of the week, of the past 5 days, but it's getting hammered a bit today. Take a look. It's down 3% today. This is up 18% over the past 5 days, or nearly 4% a day. Obviously today, a reversal. So they could still be, there's 2 different things here. So the oil trend still strong, up 5% nearly today. But look at this. Look at this. This is magic to me. Magic, beauty, art, overbought VXX. First time since Liberation Day. Whoa. Is a character change? Are things changing in the market? Look at that. 200 moving average at 36.45. What was the high today? 37.43. And then it traversed it right back to the downside. View up on the day, 35.21. We're not holding that either. I think, are we making new lows on the day on this? No. The low is 33.50. So that's VXX on the day. It is up 18% on the week. Obviously, like we're alluding to, it could be a reversal on that. I don't like this newer regime, of course, in that we put the lows in early January for VXX. This was the low in terms of volatility when we had that amazing tranquility to start the year. Now we're in a different environment with wars and the job picture and the Fed being in a stuck place with the rates. And now that's exactly what we're talking about with vol being above 50 RSI. Buyers are in control of bidding up put protection since February 11th. That was basically like Super Bowl weekend. We've been in this regime. The important thing here is we are at a important crossroads here at the 200 moving average of VXX. It got to it and got to Chembade. What do the next 2 weeks spell? In terms of this, be careful. Very mixed picture. This one, honestly, I don't have a much of a read for. We always say it's really difficult to chart non-time series instruments like VXX. I think, like I said, S&P stays right here. I want to correct in time versus price. I think similarly, as S&P is just going to hold, treading water. I think that's what this is going to do. I don't think it's going to be upper Bollinger Band anymore. I foresee kind of like a 33 VXX, but still elevated. So that's pretty much it. And they're massively bidding up in the past 5 days. We'll see if its heyday is behind. And then the other thing, so understand the gains here. Past 5 days, oil up 32%. VXX up 18%. And then number 3, way, way, way back, and that's how you can tell they're bottom fishers, chopping on the 3-month, 9-month low list, is IGV up 5.5% over the past 5 days. Look at that, for an average of 1% or so a day. Today, reversing that, down 1.1. What a move as well. February 24th, bottom at $76, oversold, piece of crap subsector, essentially. And now we've gone from 70, the handle I just mentioned, $76, all the way to, look at that, $88. Wonderful. And ugly looking candle today. Look at that candle. That's an upside down hammer. That's not what you want to see. Looks ugly. View up on the day is 87.01. They're letting that go. I have not liked this group for the longest time. This is a market where you have to be super duper choosy. I'm not picking a crap that is under a falling 200 moving average. I'm quite good. I said before, let me check my notes here. I said the ceiling for this, I believe that the rally would take this to 80, basically $90. I had 89.50. And the highs here were 88.30, 88.60, 88.05, and now it's at 86 handle. I don't like this group. When I see the SPY is going to basically just set base, try to get its legs underneath it, and try to get back to that 675 level, the price action to me looks like IGV is done. Look at all the green days as well. This has been green every single day, -2, today being one of them, since February 24th. That's too much strength for weakness like this. I don't like seeing that. It's not going to make sense to me long term, or even medium term in the next 2 weeks. So I do see this over the next 2 weeks going south and giving back these gains. And it looks like this to me wants to visit easily $85. That's $1 off from here. That's easy peasy. I think $80 makes more sense. So I'm not calling out for new 52-week lows, but I do think $80 down from here, basically 87. That's a monster move lower. You possibly could buy 83 puts. I don't think it's an awful idea. They're going to be pumped to hell in terms of IV. So sell something against it. I'd probably sell like the March, 75 puts, and then you could probably buy, like the June 83 puts. There's probably better structure than that. This is one off the top of my head. Or just outright, it's going to be expensive, like I said. So sell something against it. I'll probably sell something like the 15 Delta put. It expires, basically early April. Check the liquidity on the option chain. All right. So that was the winners of the week. Oil, vol, and that crap, software. So oil, been a performer all year, continuation. Vol, been a loser up until about a month and a half ago, and has been a little bit of a reversal. And IGV, an absolute loser, had a 52-week low 2 weeks ago. Now let's look at the losers of the past 5 days. What are they selling at the expense of, right? What are they liquidating? And look at this. It's the number one winner, the GOAT year over year. We highlighted this on Friday. This thing's up a triple year over year. This thing's down 17% over the past 5 days. It's nothing. I just told you it's up 200% year over year. So this thing's down 17% over the past 5 days, or an average about 3% a day. It is doing just that here. This sucker peaked on January 26th at $41, and now pretty nasty sell-off down to $33. A nice candle on today, under 50 RSI for about a week straight. Again, when markets are crashing, folks cling to the dollar, and dollar strength holds a lid on metal appreciation. So I don't like this group. It's an interesting hold right here, this level where it is, because that is the 50-day moving average. And for such a strong performer, typically you don't sink much lower than the 50-day moving average. You don't want to see that so much more. Honestly, when this is the year-over-year GOAT, you honestly don't even ideally see this under 50 RSI as many times. Hence, look at the blue shaded areas. Overbought for weeks, overbought for, my God, 2 months, overbought. And now it's having a reckoning. I would stay out of this one for about another week or so. It looks like to me this may not be done. It may want to go to a $31 low here, just because of what we're seeing with all the price action, the dollar being strong. And then I do think it'll set up an invitation. Unfortunately, it didn't work for me last time. I was super excited to get into GDXJ, which is obviously correlated with this for the turtles because it's number 3 year over year. I was really excited and I got stopped out. So it doesn't always work on the breakouts, unfortunately. But SILJ, your number one loser. It's the GOAT of the year since last March through today. It is the winner. It is on sale, the biggest thing on sale. And yes, the stock market's probably the only place in the world where things can drop so much and they say, I don't want it. No, thanks. I'll go to this other thing. Pretty crazy. And that's why you can get the headlines from tomorrow and you still wouldn't know how to trade it. Okay, so that's SILJ down 17%. The trend looks like it's still the same. That's what's the only thing that's kind of telling me that this may not be done. Maybe it does want to go down to $31 and then set up an invitation to a buy. But they're hammering it, obviously. Number 2, EWY. South Korea down 13%. This thing's moving absolutely crazy. Today it's flat, wild day. View up on the day is 125.77. It is holding that. It is just on the door. It's $3 off the high. This is down 13% over the past 5 days, or just inside of 3% a day. It looks like a reversal here, up 20 bips for South Korea. Anyang, I hope to be with you one day again. Look for this debase. I think this is almost done, to be honest. I like the floor. My level for this was 120 for a floor, just based on the extreme volatility. I like that it held at 121.5 basically both times, so pretty much spot on, coming off of that insanely overbought nosebleed on Everest high at 154. Never should have gotten. This is almost like oil right here. There's 4 days here. That should have never happened. So you can't be mad when it explodes to the upside, and you can't be upset when it deteriorates and crashes to the downside. This still looks great. Great chart. I can't wait to be back in this. This is not broken by any stretch. The AI memory trade is not done. Okay, let's just be real. Overextended, super expensive. Yeah, maybe, but it's not done. This looks like it can mean revert. My level for this is 133 to buy into strength. That's a 21-day exponential moving average. I want to see it close above there a day or two, and I'd rather have that confidence buy into strength. Be careful bottom fishing. You're a tweet away from correlation turning to 1, and then your portfolio looking just crimson red. So be careful here. Be choosy. I'd rather buy into strength. This is one of the best charts you'll see. They haven't even thought about thinking about selling this guy, honestly, since May, June. Like I'm saying, when it's had much lesser volatility. I'm sorry, velocity to the upside. That's when people were recognizing the strength in this market. This moves like a middle. But South Korea, the number 2 loser here, like I said, I like this. Buy it above 33 once it closes there. I think you're got a great spot to the hottest geo market in the world outside of Israel, because it's just a lot less liquid. The EIS, Ishares, Israel ETF. Okay, and then the last one, I shorted this today on the open. A direct victim of insanely high oil prices, of course, is the airlines. And also there's a little bit of a tilt here with retail being down, discretionary. They're not going to be flying all over the world going to say, oh, let's book a European vacation if we're not buying, they're not buying a house, they're worried about their job, et cetera, and the Fed's not going to cut rates. So not a lot of, up catalysts for jets. It has been a great group. I remember talking about this last week, saying wait for it to curl up above the 200-day moving average. But look at that, oversold for the first time since Liberation Day last April. Okay, not great. And that's crazy because we just went from 52-week highs on this group, February 11th. That's what I'm saying. The market, you have to change what your factor is, how you're going to get into your portfolio construction when you go from 52-week highs to under the 200-day moving average in 1 month, literally 4 weeks time. So you can just stay, doing what you're doing, but be careful. You're probably gonna get taken out in a stretcher. Again, same thing here. This is a very mixed chart. I want to see 26 half hold, and obviously we're way below that, I'm sure. So I'm looking for new lows to get out of here. I also have a tight stop. Again, it's 107. Once this goes against me by $2, I'm out. So it's not a huge deal. So basically like inside of 8% loss. Seems big, but again, it's your initial level. I haven't pyramided. I just did this morning. But I do see a bit of a mean reversion. Again, you need that oil to drop. You need USO to break to the downside. And I do see this heading to about $28 over several weeks. And you're like, wait a second, so why are you short? Because I'm thinking it's going to go lower first. I will take gains along the way, and then I'll be out way before that part happens, before it visits 28. But I do like the support. Again, that's happening down to 23.66. So if I make $1 and I pyramid into it, I'm fat and giddy and happy about that. So that's what I'm seeing here. A decent looking candle here. This is down 2.25%. View up on the day is 24.55. They've just reclaimed that. All right. And top 3 trades of the past 5 days. Let's recap. So today, going into this session, plus the 4 previous days, long oil, long vol, short SILJ. Short those junior, silver miners has been the trade du jour of the war trade. Long oil, long vol, short the junior silver miners. We'll see if it lasts. Get prepared for more, unfortunately, 40-minute confusing bipolar-esque shows like this, because that's the market we're in. Talk to you on probably Wednesday. Enjoy the weather too. It's like 75 degrees here on the East Coast. Thank God.